This is Sid Haas with LKCS. I'm the Vice President of Business Technology here. And today's webinar is going to focus on pre-screen credit-based marketing and how we can help you utilize the data from the three major credit bureaus to effectively generate new loans for your institutions. For those of you not familiar with LKCS, this slide just shares some of the services that we offer. To give you a very brief history on the company was founded back in 1961, and we've been working with credit unions ever since. We got our start on the traditional marketing side of things with printing and direct mail. We continue to offer those services, but over the last 15 years and more, we've implemented a wide variety of electronic solutions, website development, electronic marketing, and things like that. And really our focus is on utilizing technology to help our customers, get the best return on their marketing investments. So the areas we're going to be talking about today with credit prospecting and credit-based marketing cover a lot of these areas, and we'll discuss it as we go through, but you'll see how we can help you execute these pre-screen campaigns across multiple media, whether that's direct mail, electronic, or even as part of your statements and e-statements. So to start diving into some of the credit data, I get questions a lot about why should we, consider using, this credit bureau data or this pre-screen data. And the answers are pretty simple. So obviously, first and foremost, this is going to immediately enable you to identify the potential borrowers that meet your credit requirements. So we're going to find the credit-worthy, whether they're existing, members or customers, or, if you're going out to the communities that you serve, to find prospective borrowers that meet your credit requirements. It's going to help us focus on that target market most likely to respond to the specific loan offers. And I'll show you many examples as we go through the presentation. But if you're looking to refinance an auto loan as one example, we're going to make sure that the targets, not only meet your credit requirements, but also are likely to respond to an offer to refinance a vehicle. We're going to eliminate those unlikely or high-risk prospects, the people that wouldn't qualify, necessarily for your loan products. We don't even need to promote your services to them. And there are certain situations where you will, want to find people with, less than perfect credit. But we can send a different message to those individuals than we can, to the A-rated type of potential borrowers. Credit data primarily increases response rates. I'm asked all the time, well, what results do you get? And that depends. It varies from campaign to campaign, from offer to offer, from customer to customer. But we can tell you across the board that, we see at least a 5-time increase in response rates when we, execute a pre-screen, credit-based campaign than when we, just go with consumer data with some type of loan campaign. And by doing this type of targeting, by only sending mail pieces to the people that meet your credit requirements, and also, that have, other conditions that would make them likely to respond to your loan offer, obviously lowers your printing and mailing costs. So those are the primary reasons for using credit data, and we'll share examples of all of these things, as I said, as we go through the presentation. So credit data enables us to do three primary things, to meet three primary goals in addition to generating loans. It lets us acquire new loans, and we do that by identifying, again, those credit qualified, prospects in the communities that you serve. And it doesn't have to be based, geographically. If you had, lists of potential members from seg relationships or, association memberships, anything like that, we can actually pre-screen prospective borrowers on an address list if you had the names and addresses of prospective borrowers. You can use these campaigns to cross-sell loans to your existing members and customers. And again, we can look at very specific conditions, for each type of loan offer, and I'll show you examples, as I've said. And you can clearly use credit bureau data to retain business that you might have been losing that you may currently be losing to your competitors. And we'll discuss how you can do that in this presentation as well. So when we talk about credit data, just to give you ideas of what type of information is available, from the credit bureaus and from other sources, there's literally hundreds of data fields available when we talk about credit data in particular. So many of you are used to looking at a full credit report. If you envision all the different data pieces on that credit report, we have access to any of those. Importantly for you, and we're going to talk about the most commonly used criteria as we go, but important for you is that these criteria that we use can be customized for each loan campaign that you're executing. For each offer that you're making, we can use different combinations of credit attributes based, that fit exactly what you're promoting. So there's a series of general credit attributes that you would use for any type of loan campaign. Obviously, first and foremost, it's very rare for us to execute any type of credit-based campaign where we're not looking at credit scores. We can use that to adjust rates and all of those things based on the credit score of the prospective borrower or member that we're sending these to. We can look at a history of bankruptcies, histories of repossessions, late payment histories, history of collections. All of those types of things can factor in right off the bat before we look at any further of who would qualify or not qualify for your different loan offers. And there's additional fields as well. Those are the most common of the general credit attributes. There's also all sorts of other demographic attributes that may matter as well. So we can look at income, we can look at age, we can look at gender, we can look at length of residence, we can look at presence of children, all those other things. There's even lifestyle segmentation information and vehicle affinity. So when it gets to auto lending, we can even identify the type of vehicle or the style of vehicle as an example that somebody would potentially be borrowing for. We may not use those demographic attributes to include or exclude anyone from the offers, but we can use that information to personalize the mail piece or the email that we're sending to those individuals. What I mean by that is when we look at digital printing technologies today, LKCS and numerous other suppliers have the ability to customize the mail piece, the images, the colors, the verbiage on those mail pieces based on the age and gender, as an example, of the recipient. So if I'm mailing to a middle-aged woman, I will have a picture of a middle-aged woman on the mail piece sitting in a car, again, based on the vehicle affinity data, that matches that individual. If I'm mailing to a 20-something male, I may have a totally different picture with a totally different style of vehicle. So there's reasons that the demographic attributes, are important and can certainly make a credit offer more relevant to each recipient. Let's look at some of the more targeted credit fields. And these examples are obviously what data is available for an auto loan campaign to start with. So typically we have the ability to extend new loan offers or refinance offers. And you can see on your screen what I consider the most common auto attributes. This is by no means a complete list. I mean, again, there's hundreds of fields available, but we can look at the total balance on open vehicle trades. And whenever you see the word trades, if you're not familiar with it, that's any type of auto loan or lease. And we can distinguish between the two. And I'll show you examples of why we may want to look for leases as opposed to loans. But we can look at the total balance or the high balance, of current vehicle trades. So, what's the highest balance of an open auto loan for this potential borrower? We can look at their months remaining on these, open loans or leases. We can look at the number of open vehicle loans or leases or the total number of vehicle loans or leases in that individual's credit history. We can look at the age of the most recent auto trade. Did they take a loan out in the last 6 months, in the last year? Have they not taken a loan out in at least the last 2 years? In many cases, we can get the estimated auto loan rate. The bureaus do not actually necessarily provide the exact auto rate. they will provide an estimated auto loan rate, and even in those cases, surprisingly, they're not available on all loans. But that's a very commonly used field. We can look at the monthly payment on the most recent auto loan or lease. We can look at the monthly payment on the oldest auto month or lease. And we can even do a payment savings calculation. So we can identify the people that, based on the credit and term you're willing to extend and based on their current monthly payment, we can identify those people that we could save, say, at least $25 or $50 a month by refinancing. So those are some of the most common, auto-related fields that are available. But like I said, depending on, what you're looking to, how you're looking to target potential borrowers, what product you're looking to promote, there may be other fields, that are beneficial to you as well. Some ideas for you for auto campaigns is obviously, a new auto loan campaign. So we can look for people that aren't currently borrowing with you for auto loans, and we can base that on their general credit worthiness, right? Their FICO score, their credit history. But then we can add other things. So we can look for those people that have a history of open auto loans as an example, but don't currently have any open auto loans. Or maybe they have one auto loan, but they've, had at least 5 different auto loans in the past. And, we know in most households, at least at certain age groups, that there's typically 2 autos, as an average, in a typical household. So there's all sorts of opportunities for us to further refine this data, but obviously you can execute new auto loan campaigns with this credit data very easily. We have a lot of customers that we help with auto loan recapture and different auto loan refinance campaigns. So we can find, those members or customers that have auto loans elsewhere, or prospects for that matter, that have auto loans elsewhere, find the ones that would benefit by refinancing with, your bank or credit union, and extend those offers. And we can do that by looking at, looking for loans that are above a minimum loan balance, looking for loans that have at least, say 12 months remaining, and maybe that we're going to use either the estimated rate or that potential payment savings to further qualify people to, for your refinance or recapture offer. A recapture type campaign is something that we help a lot of our credit unions execute even on as often as a monthly basis, where they're looking for new loans and, loans maybe that have been on the books, that just have been on the books now for 6 months. So between that 6th and 7th month, we'll offer, that recapture campaign to refinance that vehicle. All sorts of ways to do it. And then there's lease expiration offers, which we find many of our customers don't think of. But as I mentioned before, we can distinguish between auto loans and auto leases. And in this case, we can look for people who have a lease coming due within the next 6 months. We know they're going to do something for a vehicle. So if they qualify based on your credit criteria for an auto loan, let's extend an auto loan offer to them, explaining why maybe a lease is not the best option for their next vehicle, and pre-approving them, or pre-qualifying them for a new auto loan with your institution. So just a few ideas, for you to consider. On the mortgage and home equity loan side of things, obviously you can use a pre-screen campaign to extend new mortgages, refinance existing mortgages, and do all sorts of things with home equity lending. So here's it's a little bit longer list, but these are the most common mortgage attributes. But know that we can find, both mortgage and home equity balances, the ages of those types of loans, obviously the mortgage dates in particular, what type of mortgage they have, what the mortgage rate is, what the term on that mortgage is, different things like that. We can find out how many open home equity loans are on, for a particular borrower. We can look at, which is a very important field, the combined loan to value. I get a lot of questions, by the way, of how we get that information. That is it's a modeled information, but it's actually using the same models that many of our clients use for loan decisioning purposes. In addition to to an appraisal, we're able to use those same types of models for marketing purposes, and where our customers are paying $10 or $15 every time they do that type of analysis. We only have to pay a few cents. It's the exact same model, but because we're not using it for loan decisioning, it's at a much lower price point. So we have that ability to look at combined loan to value. And then, which has been hot and heavy for the last year or two, for HARP campaigns, we can identify Fannie-owned and Freddie-owned mortgages. So if you are servicing mortgages, and selling them back to Fannie and Freddie, we can execute some very successful HARP loan campaigns with that information. We can suppress reverse mortgages, and just like we can on the auto loan side of things, when it comes to refinancing, we can do a savings calculation to identify the people that would save, so many $100 or whatever per month on their mortgage loan by refinancing with you. So those are a few examples of the available credit data on the mortgage side of things. And, again, there's lots of other fields. Mortgage campaigns, are extremely common. Any type of home equity loan campaign as well. So we can obviously refinance, run a mortgage refinance campaign. We can do a new mortgage loan campaign, a home equity debt consolidation campaign, because I'll show you on the next screen when we look at credit card campaigns, we can look at the amount of revolving debt in addition to consumer debt and auto loan debt and those types of things. We can do, offers for home equity loans or lines of credit by looking at the available equity and that combined loan to value and things like that. First-time home buyers campaigns, and as I've already mentioned, HARP campaigns and other specialized types of loan campaigns. I mean, there's FHA streamlined campaigns, different things like that that we can, execute for very specific offers. But there's a wealth of information available on the mortgage and homeowner side, that we can help you with. So when we look at credit card campaigns, obviously you can extend offers for new credit cards and balance transfers from existing credit cards to yours. So we can look at that combined debt, and we can break that combined debt down into the balances specifically on auto trades, on home equity trades, on those installment loans, and on bank and retail cards. So we can find, the people that have credit card balances over $5,000 or $10,000 and offer them, and meet your other credit criteria, the FICO score criteria, the credit history criteria, and offer them that opportunity to transfer that balance to your credit card or pay that balance off with a home equity loan, like we were talking about previously. We can look at the aggregate balance on open trades, revolving trades. We can look at the aggregate credit, that ratio between, available credit and balance, and that ratio of satisfactory trades to open trades. In other words, are 100% of their open credit card loans current, when it comes to payment, things like that, or whatever percentage you're willing to accept. So those are the types of fields that are available on the credit card side. Again, that's not all of them, but those are the most commonly used ones when we look at extending credit card pre-screen campaigns. Ideas for you on the credit card side, I mean, it's not too creative, but obviously promoting, different versions of your credit cards, whether they're platinum cards or regular cards or rewards cards, whatever flavors of credit cards you have, we can target those different cards to different individuals based on their credit attributes, their lifestyles, their ages, their incomes, all those things we've talked about. And then certainly the opportunity for balance transfers, even so we can look at the people that have your cards as an example, that have a credit card with you but are carrying balances elsewhere. And we can offer them some kind of balance transfer offer to transfer those balances to your institution. Or find the people that don't have a card with you and have balances elsewhere. So a few general recommendations for you about using credit data is use the credit data to pre-screen only. That's what it's designed for. We find many examples of our customers, and loan officers that want to use any and all credit fields under the sun. They want to make sure that the offers they're making are bulletproof, right? But you have to keep in mind that with pre-screen campaigns, it's a marketing tactic. You're not making a loan decision with this information. It's accurate, it's as accurate as the credit bureaus are going to give you, but it's not designed for you to make a loan decision because you have leeway. when you're actually getting the information on a credit report and people are filling out an application, you can decide what offer you want to extend and what loan you can put together. If we use too many criteria, what we find is we limit the potential applicant pool, right? We're reducing the universe to too small of a number. So we suggest that you limit your selections to just a few credit criteria, based on the loan you're willing to extend. Keep in mind that anybody who, responds to your offer will have to complete your full application and meet all of your lending requirements, even if the mail piece or the email says they're pre-approved. When we create these mail pieces, and I'll show you several examples, we can use words like and you have to use words like pre-approved or pre-screened or pre-qualified or pre-selected for a specific loan offer. But all of the disclosures are also in place that explain that the recipient met the credit criteria used for the pre-screen, and it also explains what collateral they might need and all the other conditions that they need to fulfill to actually be eligible for that loan offer. So just use the credit criteria that you want to, but make sure it's not too limiting. And again, we can help you with that when we, as we run counts and do different things for our clients. And I suggest that you always follow up. Just like any marketing campaign, people need to see these things more than once before they act. So send more than one mailing, or follow up a mailing with an email, or follow it up further with a personal phone call. One of the things that I really suggest to a lot of our customers, especially if they're used to using email marketing, maybe they send out the direct mail piece, to their existing account holders. They follow it up with an email, and then you can see from that email, who read the email, who clicked on the links, all of those types of things, and that now becomes your follow-up call list for your loan officers. All of those types of things will greatly enhance the success that you have without necessarily greatly increasing the costs. Because what you're doing is further qualifying individuals based on their interest level as you go down that type of follow-up path. But even if it's just sending a second mailing, that will obviously double your mail costs, but it can often lead to a very significant increase in responses, because you're reminding somebody, hey, we sent you this offer, you've been meaning to do something about it, but you haven't yet. And then combine offers. And what I mean by that is send different offers to different groups of borrowers based on what we know about them or what the bureaus know about them. The goal with any type of marketing campaign is to make your offer as relevant as possible to each recipient. So what I mean by that is, you may have a goal of generating mortgage loans, but not everybody's going to be able to, you're not going to be able to save everybody money with refinancing, and not everybody's out looking for a new mortgage or would qualify for a new mortgage necessarily. So let's find the people that are eligible for a first-time home buyers campaign right off the bat. They're renting, they've got income, they've got a good credit, all of those types of things. Let's get them into a home loan. Let's find those people that we can save at least $100 a month on their mortgage, by refinancing. Let's find those people that are carrying those high credit card balances that don't have an open home equity loan but have equity in the home, and extend a home equity debt consolidation campaign. And then we can find the people that have equity but don't have that credit card debt, as an example, and send out a general home equity offer. These are 4 different offers, all essentially based on the same data, all with the same goal of generating new mortgage business for you, but you can see how we can segment the offers and segment the recipients based on what we know about them. These 4 campaigns together, will generate better results than one general mortgage and home equity offer combined. You decide what's best for you, right? We're going to use the information that we have at our disposal. We're going to extend the right offer to the right person, and it's going to maximize your return and minimize your costs. There's all sorts of opportunities, and by the way, we can combine offers that aren't even in the same product family. So you can run a mortgage or a home equity campaign at the same time you're executing an auto loan campaign, at the same time you're executing a credit card campaign if you wanted to. But I think what you're seeing is, I'm a huge fan, of finding very specific conditions so that, again, we can increase response rates by increasing the relevance of the campaign that we're sending out. So let's talk a little bit about credit bureau data, how we get the data, what the requirements are for using the data, those types of things. So when we talk about credit bureau data, you are purchasing the data directly from the credit bureaus. I mean, we're purchasing it, I guess, from the bureaus. But it's not, it is the credit bureau data. We're talking Equifax data, Experian data, TransUnion data. You will actually have paperwork, that we give you to fill out for each of those bureaus. Depending on your relationships with them, they'll tell us what paperwork they need. When you purchase data from the bureaus, your financial institution will be listed. They're all soft inquiries that you're making, but it will list, your credit union or your bank as the institution that pulled information on that individual. We have relationships with all three of those bureaus, and that's really important because not all of the bureaus have all of the information on every person in the country. It is very important to source data from multiple bureaus, and that's because you'll see up to a 72% increase in the number of leads and the number of people that qualify for your offers when you pull data from 3 bureaus as opposed to 1. And most importantly to you is there's no additional cost to obtain the data from multiple bureaus with LKCS. So we can actually prioritize the bureaus, putting the bureau that you work with most closely in the first position, and then putting the other 2 bureaus in the second and third position. So we'll pull the bureau you work most closely with for each person that we want to contact to find out if they meet your credit requirements. And if they don't have the information on that person, we'll then go down to the second bureau and or the third bureau as needed. So we'll qualify through all 3 of the bureaus. Whenever you use the credit data, you obviously set your lending criteria. So, and this can be different for each offer. It can vary, even the offer itself can vary based on the credit criteria or the credit, the credit parameters for each individual recipient. But you'll be able to specify what FICO score ranges to look for. If it's a home loan, what LTVs, what credit histories you're willing to accept. Are you willing to accept, somebody with a bankruptcy from 5 years ago or 3 years ago or 1 year ago? Are you willing to accept somebody that has, a late, a 30-day late payment in the last 12 months? What about a 90-day late payment in the last 12 months or the last 2 years? Different things like that. So we can help you set those criteria, but they're your criteria. So speak with your loan departments and identify the criteria that you need to set. And know that whenever you use credit data, you are required to send what's known as a firm offer of credit to each recipient. So when you buy this credit data, if you buy, say, 3,000 records, 3,000 people that meet your credit criteria, you have to send out 3,000 mail pieces, 3,000 emails, or make 3,000 phone calls, or any combination thereof to get an offer to every one of those 3,000 people. You are not able to purchase credit data and then not extend an offer. And that's very important for you to know, because if you do that, you're not compliant with the Fair Credit Reporting Act. So to be compliant with the Fair Credit Reporting Act, you have to send an offer to every individual. We help with all of the Fair Credit Reporting Act compliance. So we actually will look at the language on your offer of credit, and we'll show that in a second. We'll look at the disclosures that are in place, and we'll make sure all of the mail pieces, emails, phone scripts are all approved by the credit bureaus to be in compliance with the Fair Credit Act as well. So when you're sending these mail pieces or these emails out, the language has to indicate that that recipient is pre-selected, pre-screened, pre-approved, pre-qualified. There's a number of terms, but it has to be for a specific loan offer. So you're going to tell them that they're pre-approved, for an auto loan, or pre-qualified for a home equity loan, or pre-selected for a mortgage loan at a specific rate, at a specific term, for a minimum dollar amount. And you're going to list, again, your terms and conditions and your eligibility requirements, including why credit may not be extended, even though you're telling them that they're pre-approved or pre-selected or pre-qualified. There's specific opt-out notices and disclosures that are required by the credit bureaus. Essentially, those disclosures will tell each recipient, that the information came from the credit bureaus, and if they do not want to be included in these types of offers, gives them instructions on how to opt out from receiving pre-screen offers from not only just your bank or credit union, but any institution in the country. And you must extend, like I said before, an offer of credit for each record purchased. I mean, those are just requirements to be, again, compliant with the Fair Credit Reporting Act. So I have a few samples for you just to show you what these mail pieces can look like. These are some direct mail campaigns for auto loans. You can see on the left, and I'm not sure how easy or difficult these are to see for you, but what you can see is we're showing, in this case, the individual sample loan balance, which is miraculously close to their actual loan balance. It's actually rounded up. When we look at sample loan balances and payments, we're required to round up existing loan balances to the next $1,000 level. We're required to round up current payments to the next $100 level. But we can show a recipient an approximation of their existing loan balance, their existing payment, and based on the rate and term we're willing to extend, what their new payment would be and what their monthly payment savings would be. And on the right, it's a more general type of offer. We're not necessarily basing it on a specific payment savings. In this case, it was just a general auto loan offer, but you can see how we're saying that the member is pre-qualified, or the individual is pre-qualified for an auto loan of at least $20,000 at a rate as low as 1.8%. So different approaches, both that are certainly very effective, and we can do combinations of the two. So for the members that we identify, or the individuals that we identify that we can have a significantly monthly savings, we can have a mail piece that shows that savings. And for others, that don't necessarily have the savings, or we don't know the rate, different things like that, we can have a different offer from the same institution, still branded, have similar graphics, all of those types of things, but again, tailored based on the information that we have. On the credit card side, here are two different credit card offers. One was offering a significant number of rewards points in exchange for applying for a card, and the other one was offering a balance transfer incentive to transfer a balance. But you can see, that they're both were successful campaigns. Both generated new credit card loans. They just did it in a different way. And I didn't point out on the first, on the previous slide, but what you're seeing at the bottom of each is very typical of the disclosures required by the credit bureaus. There's typically a short disclosure at the bottom of the first side of a mail piece, and a longer disclosure along with all of the credit union's disclosure or bank's disclosure on the back side. Excuse me. Here are some mortgage and home equity mailers, so you can see. It's interesting, the letter on the left for one of our clients, very simple, 3 paragraphs, no graphics. It was one of the most successful campaigns I've ever seen on the pre-screen side of things. There was nothing to it, and I think that's what made it so successful. We're sure, if you read it, it says, we're sure that you're aware that mortgage interest rates remain at historic low levels. Now's the time to refinance. You're pre-qualified. In this case, it was a VA loan offer, but it could, they also had a general offer that they sent out. But you're pre-qualified to refinance your VA loan of at least $100,000 at this rate. for so long, or this rate for so long, and here's why you should call us, here's how to get hold of me. That's all it was, and it was tremendously successful. And the one on the right is a home equity loan offer. So these don't have to be terribly sophisticated, or highly graphical, cost a fortune, anything like that. They can be simple campaigns. They can be simple emails, as I'll show you on the next slide. So this is an example of an email that one of our clients sent out recently for a no-fee home equity loan. Same language, same disclosures, no printing costs, no postage costs. Actually, in this case, they did send out a mail piece. This was a follow-up, but you can extend these without printing or mailing costs as well. This particular example was a follow-up email. And I mentioned before that we can also use this credit data to retain loans that you're losing to your competitors. We do that with a solution that we call credit alerting. So we can actually monitor your existing account holder list or the prospects living in your area. We can monitor that geographical area for anybody that has a hard credit inquiry for a mortgage, an auto loan, a credit card, or an installment loan every day. Notify you of those, every morning, and send you the leads of the people that have a hard credit inquiry for one of those loans and meet your credit criteria for that particular loan offer. It happens in near real time. I mean, literally, somebody goes, they apply for a credit card, they apply for a mortgage loan, they let an auto dealer run their credit, whatever it is. You find out about it the next morning that, Joe customer, just applied for an auto loan or had credit run for an auto loan. Here's his credit score. Here's his credit information. He meets your criteria. LKCS can send out a mail piece or an email the same day we notify you, and you can have one of your loan officers reach out to him by phone. It's extremely effective at stemming that tide and bringing that business back to your institution. So what happens is, basically, I've described it as, it's very simple. One of your account holders or somebody living in the community that you serve applies for credit. That inquiry is posted, to that person's credit file. The credit bureaus categorize those inquiries based on the type of loan that person is seeking, and we match your list of account holders or the geography that you're monitoring with the data that we receive from all of the bureaus every night. We generate those leads, we send them to you, and we respond with a firm offer of credit immediately after receiving the lead. Again, we can do that via direct mail or email, or you can do it via direct mail, email, or phone call. With credit alerting, you can select which categories of inquiries you want to target. Maybe you don't want to target credit card loans. Maybe you don't want to target mortgage loans. That's up to you, but you can determine that. You set your criteria, your credit criteria for each type of loan, and we're only going to deliver the leads and extend offers to the people that both had a hard credit inquiry the day before and meet your pre-screen criteria. And again, we get the daily feeds from all three bureaus, which with alerting is extremely beneficial to you. The more bureaus that you get data from, the more monitoring essentially that you're doing. Because just because you prefer to work with one bureau in particular doesn't mean that the borrower that your existing member or existing customer is talking to is borrowing from somebody that uses the same bureau. So the fact that we can get that data from any or all of the bureaus, means that we're going to find just that many more borrowing opportunities or lending opportunities for you. So I haven't seen any questions come in, so let me jump into some costs, because I'm sure that's what everybody wants to know. Credit prospecting, which are the pre-screen credit campaigns, not the alerting, but the prospecting is based on the number of individuals that meet your credit criteria, the number of records that you buy. And a good number for you is about 25 cents per record. There are a few demographic selects that are royalty selects that may cost a penny or so more, but a very good budgeting number is 25 cents per record. It's pretty rare that these campaigns go over that. But you have to be aware that the credit bureaus do have minimum charges. If you've ever purchased data directly from the bureaus, you'll find that their minimums are pretty high. They typically have about $2,000 to $2,500 minimum charges on these types of pre-screen campaigns. Our minimums are much lower than that. We purchase a substantial amount of this data, so we've negotiated minimum charges with the credit bureaus of $750, and those are monthly minimum charges. It's not monthly meaning that you have to commit to spending at least $750 every month, but in a given month, if you run a credit prospecting campaign, in other words, if you purchase credit data in a month, you know that within that calendar month, you're committing to spending at least $750. But that $750 can be split across multiple campaigns. So you can run small auto campaigns and small home equity campaigns and small mortgage campaigns, and together fulfill that minimum charge. $750 is pretty low, by the way, so if we look at 25 cents per record with a $750 minimum, basically you're committing to buying 3,000 records, or at least paying for the equivalent of 3,000 records. We have a lot of customers that will execute small campaigns that are below that, and they just know that that's the cost, and we have others that run multiple campaigns or larger campaigns to fulfill that minimum. Fortunately, those are imposed on us by the bureaus, so we've negotiated the minimums as low as we can, but there are minimum charges involved. We can run list counts and cost estimates for you, at any time at no charge. So if you're just thinking of launching a pre-screen campaign and want to know what the cost might be and maybe how many people would qualify based on your credit criteria, give me a call or send me an email. I'll have my contact information available for you shortly. And we can, run the numbers for you and tell you if it makes sense, help you decide, if it's worth executing or not. On the credit alerting side, cost is based a little bit differently. Rather than being based on the number of records that you purchase, it's based on the number of people that we're monitoring each month. And what we can do there is run what's called an opportunity analysis for you, where we can tell you from your account holder list, your member or customer list, we can tell you in the past 30 days exactly how many of those individuals have applied for a mortgage loan, an auto loan, or a credit card in the last month. And we can tell you, what state they were from and what credit bureau reported it, and how many of those would have met your specific credit criteria. So we can tell you that this many people applied, this many would have met your credit criteria. We can look at how many loans you opened in those past 30 days, and that would give you the number basically of loans that you lost to your competitors. And we can help you run some, based on some historical information that we have from our clients, we can help you approximate how many loans you would be able to close with the credit alerting program to see if it makes sense for you. And here is an online calculator that we've developed that you can use as well. You can see the address right here. That is lkcs.co. It's not .com, it's .co. It's a shortened URL /calc-ROI. And that will load for you, enable you to customize the data based on the size and information from your institution, and actually let you see, an approximation of what results you could expect. More accurate would be to proceed with that opportunity analysis, but if you just want to plug some numbers in, and see essentially what we're telling you the program might be able to do for you, that's where you could go. And obviously, I can get you in touch with customers that are using credit alerting. So if you're looking for real references, I'd be happy to provide those for you as well. And that's all I have for you today. So thank you very much for your time. I will remain on the line for any questions. Just feel free to type them into your toolbar on the right side of your screen. or please feel free to reach out to me directly via phone or email, as you can see there. Thanks very much.